Who doesn't love taxes? No one? Just us? Alright, well in any case, taxes are just one of those things that everyone has to understand on some basic level. As a business owner, not only do you have to understand how taxes work on an individual level, but you also have to understand how taxes function for a business. And with new rules, regulations, and guidelines being passed every day, it can become a lot to keep track of. This includes guidance released in early 2025 going over how paid family and medical leave benefits should be taxed. Speaking of which, in this video we'll go over this guidance, formerly called Revenue Ruling 2025-4, and explain how the IRS taxes paid family and medical leave benefits. We'll look at how they break down taxing both the premiums and the benefits paid out to those who utilized these benefits. Let's get into it. First, a little bit about paid family and medical leave benefits. The U.S. has legislation regarding family and medical leave, the Family and Medical Leave Act, but this can be unpaid. Some states have laws requiring paid leave, and some employers offer it to employees regardless of legislation. Typically, these benefits function similarly to a group health insurance plan or unemployment benefits. Either an employer and employee pay a small percentage into a private fund in regards to employer-offered paid leave, or they pay into a state-sponsored fund. With all this, the question then becomes how these premiums and the eventual received benefits are taxed. Contributions made by employees are treated as after-tax deductions, thus, they are subject to federal income and employment taxes. This is reflected on an employee's W-2. Employer contributions are deductible as a business expense, but do not get reported as part of an employee's taxable income. There are no federal reporting requirements for employer contributions. For money received from these benefits, the IRS distinguishes between family leave and medical leave. Family leave benefits are included in an employee's federal gross income, but are not considered taxable wages for federal employment taxes. If the state is paying out the benefits, an employee will be furnished with an I-9 from the state. Medical leave benefits are slightly different, with taxation depending on the program structure and whether the contributions were made on a pre-tax or after-tax basis. Unless benefits were paid out due to the employee's own serious health condition, medical leave benefits are subject to taxation depending on the premium amount paid by the employer and the employee. That's the guidance in a nutshell. Taking the time to understand the different taxes you pay as a business, as well as how certain benefits are taxed, can be crucial in ensuring your business is covering all of its bases in terms of costs. Please like, subscribe, and follow to stay in the know on all your tax updates.